Welcome back. Now, an interest rate hike is likely today, but the question is, will the SA Reserve Bank increase the repo rate by 25 or 50 basis points? Economist at Stellenbosch Business School, this Professor Andre Roux, speaks to me now about this. And Prof, good morning to you. Thank you so much for your time. I mean, I would say Happy Africa Day, but is there much to celebrate on this Africa Day? Prof, I'm sure you would agree with me, this is so un-African. Can we afford another basis points hike, which is likely? Good morning.
Good morning. Well, first of all, just so happens I'm speaking from Soho in London. We are hosting an Africa Day celebration. But the topic is interest rates and inflation. You know, it's one of those things where the Reserve Bank in some ways has little choice. If you consider that their constitutional mandate is very clear, their aim is to protect the value of the currency. Now, the scaffolding for that is, as we all know, this thing called inflation targets, 3 to 6%. So whenever inflation goes beyond 6%, there's a strong chance that the Reserve Bank will embark upon a rising interest rate cycle. Now, we saw yesterday the inflation rate has come down, thankfully, to 6.8%, but it is still above that upper end of the target. And therefore, taking into consideration the fact that elsewhere in the world, interest rates are still on an upward trajectory. And we can't afford to not raise interest rates if others are doing so. If that were to happen, then our own exchange rate would weaken even further. So the balance of evidence suggests that tomorrow morning when we wake up, we'll be paying a bit more if we own debt. The key question, as you're saying, is will that be a 25 or a 50 basis point increase? 2 weeks ago, I think there would have been no doubt, definitely 25. But unfortunately, since then, we've had this bit of these shenanigans regarding rumors, regarding arms deals with Russia, etc. And as we know, that caused the rand to tumble somewhat. So there's a school of thought that says we might need 50. Personally, I believe that will hopefully be a temporary situation and that 25 ought to be sufficient. Because as we all know, as the previous speaker pointed out, consumers, especially poorer ones, businesses, small businesses, are being bombarded by higher food prices, higher electricity prices, if electricity is available, higher this, higher that, high unemployment, etc. So it's a very fine, delicate trade-off. The Reserve Bank has no choice, as long as the Constitution says what it says, but they would probably, I would like to think, they'd probably try to moderate the increase.
Right, and you're absolutely right there in terms of, you know, the impact that has led to this decision being made by the South African Reserve Bank, Prof. And I just wonder if the rumours around, you know, obviously the weapons, whether they were shipped into Lady R to Russia or not, are true. Those allegations, of course, coming from the US Ambassador Ruben Brigitte. But are there any other factors that we should also take into notice that could have contributed to this decision by the Reserve Bank?
Well, the possible decision you mean to raise by 50 basis points? Well, yes, I think they might, just by their very nature, they tend to err on the side of being conservative, rather raising than lowering, or rather raising more significantly than not raising. And that's not always a bad thing. You'd rather have a conservative view than a very liberal one, because that could create problems down the road. But no, I think that the dominating fact right now, whether it be 25 or 50, is that effect on the rand of these rumors, shenanigans, whatever you want to call it. We must also bear in mind, as your previous speaker, I think, was saying, that many of the causes of inflation are not really within the ambit of control of interest rates or money supply. He's quite right. Raising interest rates will not have any effect on the world price of food or the world price of oil, will not have any effect on minimum wages. And by the way, that's another inflationary factor that's crept into the equation. The announcement recently that minimum wages in future will rise by inflation plus a bit more. Now, sadly, that creates more inflation. We also saw the government's fiscal situation as not as healthy as we hoped it was going to be. And that's partly because of ESCOM let's say government civil servant wage increases. So the inflationary pressures are there, but I think common sense will hopefully prevail. in the sense that, yes, we need to raise interest rates, but let's not overdo it.
Yeah.
Because you run the risk of rising interest rates becoming almost counterproductive.
I want to touch on the point you made about, wage negotiations also going on right now with public service servants, because the likes of SAFTU, Union SAFTU, saying the Reserve Bank is likely to increase this interest rate, Prof, at the expense of the already struggling working class. This is, of course, the message and the narrative they're understandably, communicating here. But on the other hand, the Deputy Reserve Bank Commissioner said here, that is, of course, or rather the Deputy Governor, Rashad Kasim, said, if we did nothing, and Prof, I'm quoting him here, he says, if we did nothing, consumer income is going to erode more and more, so maybe a little initial pain may benefit consumers in the medium to long run. Your thoughts?
Yeah, I agree. I mean, that's very often the case in the world of economics, at the risk of using a cliche, short-term pain for longer-term gain. So if we were to do nothing, or even lower interest rates, which would be very popular, you might buy, in inverted commas, a bit of growth. But that would not be very sustainable. It wouldn't last very long. It wouldn't be very meaningful. All you're going to end up with in the longer term is even higher inflation, which sometime down the road would call for a really draconian increase in interest rates. Then life will be awfully tough. It's also interesting, by the way, I did a quick calculation recently. We often talk about the real interest rate, the real prime rate. Now, that's the prime rate minus inflation.
Right.
Interestingly, the current level is not all that high by this country's own historical standards. In fact, it's lower than the long-term average. For what that's worth, it doesn't take away the pain. And as we all know, as your previous speaker also mentioned, that part of the population which is really bearing the brunt of food inflation is obviously the poorer members of society.